After a few years of work, you finally saved up a little spare cash. Put it in a fixed deposit, and the interest is pathetically low, no match for inflation. Want to buy stocks, but you can't read financial reports, afraid you'll be harvested like a leek the moment you step in. Want to invest in real estate, but the capital barrier is too high. Just as you feel lost, suddenly someone recommends you a financial product. It boasts sky-high returns, withdraw anytime, zero risk, only gains, never losses. Sounds tailor-made for you, doesn't it? Tempted? If you are, then congratulations. You're about to become the most brutally harvested leak in the capital market. This is top-tier logic. I'm Mojo. We see through the logic of money, because wealth is the only chip, to real freedom in this brutal world. Online, finance videos are everywhere. Many so-called experts open with a hot tip telling you which stock to buy, which fund to pick. That's actually deeply irresponsible, because investing was never a gamble of luck. It's a science that demands rigorous insight and respect for the market. Today, I'll break down the 5 underlying truths you must grasp before investing. First point, the most core iron law, the impossible triangle. In the financial world, every financial product is bound by this law. The 3 corners are high return, low risk. This law tells us no investment can have all 3 at once. A product, at most, satisfies 2 of the corners. It's like a girl picking a boyfriend. You can hardly find a perfect match who's rich, handsome, and loyal all at once. Either he's rich and handsome but not loyal, or handsome and loyal but broke, or loyal and rich but not good looking. Financial products are exactly the same. If you want high return plus high liquidity, cashable any time, then its safety must be extremely low, meaning high risk. If you want high safety plus high liquidity, then its return must be pathetically low, like a bank demand deposit. If you want high return plus high safety, then you must sacrifice liquidity, like real estate in a top-tier city. Sink money in, and cashing out within days is extremely hard. The poor keep hunting for that non-existent perfect product. But the rich know the wisdom of trade-offs. They know there's no perfect investment, only asset allocation, combining the plan that suits them best. With the triangle understood, let's see the second point. Return and risk are always proportional. Many step into the market clinging to an unrealistic fantasy. Is there an investment that earns me over 20% a year, yet never loses my capital? The brutal truth is, if a high-return, low-risk investment truly existed, the market's self-correcting mechanism would kick in instantly. This project would rapidly attract a flood of capital. That massive money would instantly raise its cost, dragging the return down fast until it falls back to a reasonable market level. In other words, behind high returns, high risk always hides. This is the objective law of the market. The rich are full of awe for the market. They know every bit of excess return quietly carries a price tag of risk. But the poor ignore this rule, blindly chasing windfalls, ending up watching their capital turn to ash. With this rule clear, the third point is easy: how to see through a high-return scam at a glance. Next time someone pitches you a project boasting a steady 10% profit a month, guaranteed principal and interest, funds in and out anytime, the answer is simple: turn and leave immediately, because it's usually an outright scam. This kind of scam is what we call a Ponzi scheme or a money game. They exploit ordinary people's lack of financial literacy and greed for high interest, designing dazzling packaging. At first, they really do pay you high interest on time, letting you taste the sweetness, luring you to invest more, even drag in friends and family. But the interest they pay you is really just taking the principal of later joiners to pay the earlier ones. Once not enough new money flows in, the whole scheme collapses in an instant. The operator runs off with the cash, leaving bankrupt investors behind. Remember a golden line in investing: you crave his high interest, but he's after your principal. The rich aren't easily fooled, not because they're so smart, but because they deeply understand money's underlying logic, seeing through that false prosperity that defies the triangle at a glance. Fourth point, the discipline top players guard with their lives. The circle of competence. In the market, many don't even know how a company makes money, yet dare to dump their life savings in, trusting a friend's tip or an online guru's call, blindly following the herd. The stock god's golden partner, Charlie Munger, spent his whole life repeating one concept, the circle of competence. What is the circle of competence? Take baseball as an analogy. A top hitter doesn't swing at every pitch. He waits patiently until the ball flies into his surest sweet spot, then swings with full force, hitting a home run. Investing is the same. Munger believed your investments must stay strictly within your circle of competence, never touching anything beyond your understanding. He said something razor sharp. If you don't know where the edge of your circle of competence is, that means you're already outside it. In the simplest words, what you don't understand, you firmly don't invest in. The poor always fear missing any money-making wave. Others trade crypto and profit, so they trade crypto. Others buy houses and profit, so they borrow to buy houses. In the end, they often become the last mouse left holding the bag. But the rich have powerful restraint. They'd rather miss a windfall they don't understand and focus only on the field they've cultivated deeply, because they know guarding the circle of competence is guarding their own capital. Final fifth point, the most brutal, most core law of wealth distribution in this society. Wealth is always the cashing in of cognition. A popular line lately nails this truth. You can never earn money beyond your level of cognition, unless by luck. But money earned by luck is usually lost backed by skill. This is an objective iron law. Every dollar you earn is the cashing in of your cognition about this world, and every dollar you lose is because your cognition of this world has a flaw. This is the greatest fairness in this world. When a person's wealth exceeds their own cognition, this society has 100 ways to harvest you, whether through inflation, financial traps. The market always finds a way to loot your pockets clean until your wealth shrinks to match your cognition. The poor always fantasize about turning their life around with one inside tip, one stroke of extreme luck. But the rich pour all their energy into raising their own cognition, because they deeply know the ultimate battlefield of investing was never on that stock's candlestick chart, but inside your own brain. By now, take a moment to examine your past investing experience. Have you ever, greedy for a moment's high interest, fallen into a financial trap? Have you ever, afraid of missing out, blindly followed the herd into a project you didn't understand at all, ending up covered in wounds? Remember, in the jungle of capital, no one kindly hands you the secret to real big money for free. Anyone trying to tell you high return, zero risk is drooling over the capital you painstakingly saved. Starting today, put away that restlessness craving overnight riches. Learn to respect the market, admit your own ignorance, and focus on expanding your circle of competence. Wealth is always the compensation for cognition, never the reward for greed. Guard your circle of competence, and you guard the fortress of your wealth. When you truly see through the nature of investing, no longer lured by brainless windfalls, you're no longer a leek to be harvested, but the trader who commands your own destiny. If this episode helped you, please subscribe to Top Tier Logic, hit like, and ring the bell. Next time, we keep uncovering the logic behind wealth. I'm Mojo. See you in the next one.